Hello and welcome everyone to the week ahead commodity report for the 6th to the 10th of May, presented by myself, Phil Carr, at the Gold and Silver Club. And of course, we will be reviewing gold, silver, platinum and crude oil prices for the week ahead. So first of all, on Friday we had non-farm payrolls, and we actually saw the biggest breakout on gold in 2 months on Friday, bouncing off 4-month lows as hedge funds and money managers, they've now switched to a net long position in COMEX gold, essentially buying the recent pullback. Meanwhile, we've now seen hedge funds cut their bullish positions on crude oil in the first time since February, as US crude oil stockpiles last week, they rose to the highest levels since September of 2017. So with that, we'll go over to the charts and we'll talk you through our forecasts and our key levels as we go into next week. First of all, we're going to have a look at gold here, and we described gold and what we are forecasting in detail over the last week on both our week ahead report and the midweek report here as well. So gold actually has been a classic move over the last week. In the lead up to the FOMC statement is where we saw this gold appreciation in price. We predicted that we were looking for a gold breakout to the upside in the lead up to the FOMC statement, but then look out for that US dollar strength to come back into the market on Thursday and potentially move gold lower from a bear flag formation. And in fact, that is exactly what we saw at the end of last week. So we essentially saw this accumulation in price for gold at the beginning of the week in the lead up to the FOMC statement, and then sellers came back in. They sold into rallies, which is exactly what we suggested last week, is that hedge funds and money managers at that time, they had gone for a net sell short, so rallies were to be sold into. And then at the end of the week is where we broke back down, back towards the swing lows here. And then on Friday, we springboarded higher here, as we've now noted that funds have bought back into this recent dip with gold. So if you have a look at the price action on gold, one thing which is very clear right now is gold is range bound. It's been range bound to lower, but if you have a look at where gold is finding support, it's approximately at 1,266 US dollars per ounce. We bounced off that level yet again here on Thursday, breaking down to 4-month lows before gold has then springboarded higher and found some resistance here just around the 20-day moving average. We are still within a downward trending channel at the moment here with gold. However, we're definitely still moving within that week-to-week 200-point range. That's what you want to be focused on. That's what you want to capitalize on each week, is that gold is moving within a 200-point range. You want to be buying near support, taking profits near resistance, or selling near resistance and then taking the price all the way back down to support. So as we go into next week, what do you need to be aware of? First of all, of course, hedge funds and money managers, they have now switch to net long. Okay, so therefore we could have a bullish bias on gold as we go into next week, particularly if gold can build up any momentum here beyond Friday's non-farm payroll. So if it can break back above a lot of this resistance here and make a move back up towards that 1285 zone, that of course is a key level too, where sellers may come back in. But if gold can break out above that level, the next really key levels of resistance would be approximately 1295. So if gold was to be able to follow through and not have too much retracement next week, particularly at the beginning of the week, those would be the next levels that you want to look at. Now, on the flip side of that, of course, if gold is just not going to continue this momentum following on from Friday's non-farm payroll, if it gives back the gains and starts to roll over, finds resistance again here back towards that 21-day moving average zone, if it doesn't get beyond that level, then you could see gold start to roll over, consolidate and make a move back to 1266. If gold was able to break through 1266 on a third test here, it may not, but if it was, the next major level would be taking the price back to approximately 1,260 US dollars. That would be the next major level of support that I would look at, and that is what I would target if I was looking to sell short and then take out these swing lows for a move back towards that level. Now, the price action is not suggesting that at the moment. That's only if we consolidate and roll over. Otherwise, what I would look at here for gold going into next week is to see whether it can break above this current downward trending channel, make a move then back to 1285. If 1285 gets breached, make a move then up to about 1295, but still within a 200-point range as we go into next week. Keep that on the radar, and also note the dollar strength is tending to come back in towards the end of the week, particularly on Wednesdays and Thursdays at the moment. So usually gold is stronger at the beginning of the week over Monday or Tuesday in particular, and also Friday. If we've seen a significant decline on Wednesday or Thursday, it's typically potentially Friday where gold will break out. The best way, in my opinion, to trade gold right now is just trade the ranges, that 200-point range. You can see if you just buy at support around the 1265 zone, sell around resistance, so just trade this market. Then let's move it over to oil before we go over to silver in more detail. So I want to take you over to Brent crude oil. And Brent crude oil, we mentioned last week in the report that we were looking to be a buyer on a revisit back towards that $70 per barrel level. That's what we did last week. We took the price back towards the upper end of the channel here, but we also banked partial profits for just under 100 points on Wednesday ahead of the oil inventories data. Now, the oil inventories data is what really broke the support here for oil later on in the session. So we moved up our stop loss, notched that higher, and also make sure that we were guaranteed profits on oil. So the stockpiles last week, they rose to their highest level since September of 2017. That caused a flush out to the downside, particularly on Thursday, which is where we broke through 21-day moving average in the midpoint of the Keltner. And you can see here now on Friday, we've closed below that level. Now, this is important going into next week. Hedge funds have now switched. They're no longer looking to be as aggressively on the net long side. They've cut their net longs, and that will be important going into next week. Something I mentioned before, which will help you a lot with your trades on oil, is just put that 20 or 21-day moving average on your chart alongside Keltner channels if you've got those, and that will help you just alongside everything else I've just mentioned, just to be on the right side of this trade. So, for example, once we broke and closed below that level going back to October of 2018, that's where the price accelerated to the downside, and you should have been selling and staying sell short all of that time until it actually broke back above that zone at the beginning of January. You can see that level on my chart here. Once we broke above that, pullbacks were then to be treated as buying opportunities, which we've continued to do throughout 2019. As we mentioned multiple times, that we've continued to buy into all of these dips on oil. Oil, of course, up over 40% this year, and it's been a fantastic market to trade and take advantage of these pullbacks. Now, what we are seeing very clearly is a shift here. So we have now broken and closed below that. We need to respect the fact that oil has done that, and therefore we could look at the potential, if oil is unable to climb back above that level of resistance, then we could look at selling any rallies here, especially if oil was to roll over, break back below Thursday and Friday's lows here. Then you could look really for an escalation in price action to the downside. So if we start breaking through, for example, Thursday and Friday's lows as we go into next week, that is where I could see the price action increase to the downside. Of course, you've got $70 per barrel. Below that, you have 68.50, and then it could start to really make a move back towards that previous swing low around the $65 per barrel handle if oil was to continue to accelerate to the downside. Now, oil actually over the month of May is normally not a negative month. April tends to be the best month of the year for oil. We've capitalized on a lot of the long side here where it broke all the way up to 5-month highs, and that has also seen oil prices at the peak was up over 10% up over April. So that played out perfectly from a seasonal point of view as well. Normally over the month of May, it's between a 1 to 2% increase in price. Now, of course, we've still got quite a lot of the month of May to go here. We're only really still into the beginning of May. So we could get a dip lower here at the beginning of May, which then results in buyers coming back in later on in the month. But at the moment, overall, the price action is telling us oil is a bit vulnerable. We may see it get sold into on rallies here. We'll be looking out for the oil inventories data next week as well on Wednesday, and also just note that hedge funds, they have reduced their net longs over the last week. So if we do break back below the weekly lows here, oil could be a bit vulnerable. And just note again that it is below the 20-day moving average now, which would suggest at the moment you don't want to be buying oil until it climbs back above that level. It could actually be a much larger bull flag in development here, and if oil was able to break back above that in the coming days, this is Brent crude oil here, if we were able to see a break back above that bull flag and springboard higher, it would actually set up for a long, but it just needs to break and close above this resistance before doing so. It's not a long just yet, and if it breaks back below the swing lows, which I'll show you on the weekly chart as well, if oil breaks back below the weekly lows, that is where it could pick up momentum. You can see the weekly chart here is now starting to break down. So just have that on the radar going into next week as well. Now let's just move it over to silver. So silver is really interesting, the price action that we're seeing here at the moment. So the gold to silver ratio broke above 10-year highs here last week. It broke above 87 to 1. So what needed to happen, either gold prices needed to break down further in order to match the declines in silver prices, or silver needed to break out to catch up to gold price action, which had continued to find support around 1266 last week. What you will note, which is very clear on silver, is this downward trending channel, and essentially silver is right back up at the upper end of the channel where it tends to find resistance and get sold back into. You've also got the 21-day moving average around that level as well. So silver going into next week, again, it could be make or break. So either it's going to have an attempt to break out from this downward trending channel and then follow through if it closes above it, or it will just simply hold at resistance, give back the gains, go into next week and roll over. Now, hedge funds and money managers have actually bought recently this dip on silver, and that's evidenced by the fact that we moved up over 2% to the upside here on Friday. It's now whether silver holds on to those gains or whether it rolls over. Normally the month of May is not such a strong month for the metals in general. However, we have had a fairly sizable move here to the upside on Friday. So I want to see whether silver can break out from all of this resistance and whether it does that and confirms any sort of buy setup by doing so, or whether it's just going to hold at this resistance, consolidate and potentially just roll over back towards the lower end of the channel. So either way, it could set up for a trade opportunity on silver. So definitely have that on your radar as we go into next week. I need to get a bit more confirmation on that. Note again that the dollar strength tends to come back into the market normally midweek on Wednesday or Thursday in particular, and that's when the metals tend to be weaker. So if you're looking for long positions on the metals, normally it's better to do so from Tuesday through to Wednesday as opposed to Thursday. That's not normally the strongest day of the week for the precious metals. Now, with that said, let's move over to platinum. Platinum had a 2.5% breakout to the upside on Friday, but over the last week it declined 3%. You can see it broke through key support here as well with platinum back below the 880 level, and it's managed to springboard here on Friday, forming a bullish engulfing candle, and in fact it got quite oversold. Now, hedge funds and money managers did reduce their net longs on platinum throughout the last week here, and we've also definitely seen some profit taking at the end of last month of April after platinum had increased in price over 6% to the upside. If we actually have a look on the weekly chart here, you'll see where we've broken through that previous level of resistance which turns support, and it does look a little bit bearish on the weekly here for platinum going into next week. My focus will be more on gold, silver and crude oil, but I am watching out here for platinum to see whether that zone here is going to get defended, $850, because if platinum does retrace, if it consolidates and starts to come back towards that 850 level, if buyers definitely come back in around that level again, it could actually be a good area to look just to trade the range again short term, just to trade this market if we see that. And of course, we've got overhead resistance around $880 at the moment for platinum as well. So it could be an opportunity on a pullback here back towards the 850 zone to look at for buying back into platinum, as long as we get evidence of support of that zone. And of course, it would need to retrace and come back to that level in order to set up for that sort of price action. On the flip side of that, if it continues to drive higher here, break back above Thursday and Friday's highs and break back above 880, then it will just be a very temporary break of that previous level of support. Could turn into a V-shaped reversal and then lend into a breakout trade as well. So I am looking out for platinum here to do either a retracement back to support, in which case I'll look at evidence of buyers coming back in, or if it breaks out from resistance here, it could set up for a breakout trade as well. So definitely have platinum on the radar there as well. I do like the potential for crude oil here if it breaks back below the weekly lows to sell into that, but I'm looking out also for the oil inventories data on Wednesday. I really like the ranges here on gold at the moment. If I take you out to the daily chart, just trading within these ranges is great. Buying back at support, selling at resistance is working out really well for this market right now. So just keep an eye on that. If it retraces back to 1265 to 1260, I'd look at evidence of buyers coming back in again within that usual weekly 200-point range. If it breaks out to the upside, it could lend to a short-term breakout trade, but then look out for resistance around that 1295 zone again. So I do hope that helps you with your trades as we go into next week. Of course, if you'd like to join us at the Gold and Silver Club, join a community of successful traders, there is an opportunity for you to do so. As a member of the Gold and Silver Club, you get access to our exclusive live trading room webinars hosted throughout the week. You also get access to real-time trade alerts and trade management. You have access to all of our trading research and market insights, which are sent to you in real time. You also get access to our Private Members Academy membership site and support and one-to-one mentoring. Again, to make an application to join us at the Gold and Silver Club, just go to www.jointhelivetradingroom.com. The link is also below this report in the description. So just click on the link, make an application, and we will of course get in touch with you ASAP. And do make sure you subscribe to our YouTube channel as well. That way you're kept updated with all of the latest commodity reports.